Good morning and welcome to FXStreet Currency in Play. I'm Matt Brown. I'm joined down the line by Ryan Littlestone, who is a trader at forexflow.live. Good morning to you, Ryan. Are you well?
Yeah, very well, Matt. Yourself?
Very well. Happy Monday. Well, let's kick off with the headlines. Starting off with euro dollar. Euro at fresh daily lows with politics waiting on the pair. We've seen, obviously, Spain, Catalonia, this issue continuing. Spain looking to, or Madrid looking to take some power back from the Catalonian regions. So that kind of weighing a little bit on Europe this morning. Obviously, Brexit negotiations still ongoing, and there's a bit of to and fro and dilly-dallying as to be expected there. And moving on, looking at dollar yen, Abe's victory weighs on the yen, with Abenomics seen taking a second phase, thumping victory for the Japanese PM and his LDP party this morning. Albeit, though, if you actually looked at the currency pair, certainly dollar yen, you wouldn't really realise there was an election, albeit dollar getting a bit of bid. So let's have a look at your charts. I mean, starting off with dollar yen, seeing obviously that strength there on the back of the election. What's your take on this? I mean, no real significant moves, and I suppose the market's probably quite happy that, as expected, that victory came through.
Yeah, I think you nailed it there, Matt. You know, it was expected to win. I thought we might get a little knee-jerk pop on the relief rally, minor one, which we did. We opened up some, 20, 25 pips higher in early trading on Monday morning. Rode up to 104 and sneaked in there for a couple of pips and came back down. But we found some support around the sort of 60, 70 area, and we're consolidating there at the moment. But you're quite right, the market was fully expecting it. He did probably slightly better than what even he thought he was going to get, so that's good news as well. And the Abe train continues to roll in Japan, and I think we're going to go back now on particularly the dollar. We'll switch quickly back to watching what's happening in the US. Obviously, we've got the upcoming Fed meetings. Will they hike? Won't they hike? But the dollar seems to have found a little bit of a bid, especially Thursday, Friday, late last week, and it's sort of just been grinding high. It's not been anything big or volatile. It's just been on one of its grinding trails, and that's something to keep an eye on. And again, we're back to bond watching.
Understood. Just before we look at the 10-year, just dollar yen touching that 114 level, albeit it's come back a little bit. If we can break above the 114 level, do you feel we could be breaking out of this current range technically that we've seen in dollar yen of late?
Yeah, it's possible. We've got some big levels up at the 114, 40, 60 area. If you look at the chart, you've got those big two highs there that they've marked the top of the recent range, and that's going to be a big level. So if the dollar is going to do something, that's the sort of level it needs to break. Break there, and you can bring probably 120 back into focus again. But big levels are there for a reason, and if it fails there, then we're stuck in this range again, and we'll probably see it come all the way back down again. But yeah, it's definitely looks like the dollar's finding itself a pretty strong bid. As I say, it's not spectacular, but it's grinding up there, and if it does hold, these are the big levels that we've got to take on. So if you're in longs, it's the sort of level that you might want to take some profit off against if it struggles. And conversely, if you're looking for shorts, you can trade against those levels and keep it fairly tight in case you get the break.
Understood. Moving on to the 10-year, we've seen the dollar strengthen a little bit of late, and that's reflected actually in the 10-year Treasury yields coming back into favour. Just talk us through this, if you're trading this outright, or what you should be looking for here if you are trading the dollar against other currency pairs. Yeah,
sure. The dollar's been handcuffed to Treasury yields again. It's one of those correlations that generally happens all the time, but at some times it's stronger than other times, and we're seeing one of those strong times at the moment. US 10-year yields are up at 2.39, just below a big level at 240. And again, it's one of these big levels that we've got to watch. If we break there, then we're likely to see a significant push up in those bond yields, and the dollar's going to follow along with it. So it could be, you will have to watch two markets at once to gauge what's going to happen. If bond yields go up through 240, 250, then that top side in dollar yen may not be so strong because the dollar's just going to go with bonds and that's it. It's going to ignore the technicals and all the big levels in the way. So when you are looking at something like dollar yen, you have to match it off against what's going on in bonds at the moment. And if there's signs that it's struggling at 240, like it has done previously, then you've got to worry about the top side for dollar yen and whether we're going to have another top and see it drop back again.
Understood. Moving on, looking at the euro against the dollar, a bit of weakness as we've already mentioned in the euro this morning, trading with this kind of 117 handle now. Again, potentially testing some of the recent lows, and there's obviously a lot of downside potentially with the euro dollar if the political situation continues. Where can this go? Is it a combination of euro driving this, or again dollar strength? Where can we see this going in the maybe short term and medium term?
Yeah, as you say, you're correct. It's politics again, and it's the dollar again. And there's two forces pushing against the euro at the moment. And I'm getting a bit worried about Spain because now it's sort of coming to crunch time. As we know, it's a very flammable situation at the best of times. And, if Madrid goes marching into Catalonia to, overrun the government, that's I can't see it ending well. And if we start getting problems on the streets, violence, which obviously we hope we don't, but, that situation could tip very quickly, and that's going to affect the euro. And we're 40 odd pips off from a big level down at 117. It's been the recent low of a consolidation phase. And again, it's another big level in FX markets that we've got to monitor. If we get a break then, it's a proper break, we could head down to 115, that sort of area.
Understood. And even trading the euro against the yen can be quite an interesting trade, although we haven't got a chart at the moment. Not for the faint-hearted, but it's something there's potentially a trade in that currency pair at the moment as well.
Yeah.
And looking ahead at the macro data or economic calendar, where we've got the Chicago Fed National Activity Index due out later on. Look, that's not a big number, really. No. There isn't anything to whet the appetite of traders today, so I think the focus will be on political situations and certainly looking at Spain and how that pans out. But looking ahead at the week, obviously we've got ECB on Thursday, we've got GDP data out from the US, and we've got a lot of PMI data out tomorrow. So is there anything looking ahead at the week as a trader that's jumping out at you?
Yeah, obviously the GDP numbers are going to be big. The ECB is going to be big because apparently, we're supposedly going to get their ideas for the next taper and their next moves, and the market's got its expectations pretty much set now. They're looking in the region of 6 to 9 months extension on QE and anywhere from 20 to 30 billion cut. So I don't think they'll be too far off. I think my view has been that they'll perhaps go longer on the extension and go to a year because it doesn't really matter how long they go for because they can always cut it short, but if they go short they can't then go longer. But yeah, the data is quite the only part of the week, and then it ramps up for the rest of the week, and hopefully it should give us some good trading conditions.
Fantastic. Well, we look forward to that, but in the meantime, Ryan, thank you so much for joining us down the line here on FX Street Currency and Play.
Thank you.